how does allocation to VC fluctuate at these institutions depending
Yeah.
on different market cycles?
Yeah. It's funny. The short answer is it shouldn't, right? When you think about exposures to all the liquid asset classes and venture being the most of those, what you should really do is think about it programmatically long term. We always say innovation doesn't stop based on where the stock market is or what the interest rate is. There may be pulls one way or the other, but to get exposure to the asset class, you really have to think about it in a long term horizon. So where I'd say the optimal portfolio construction is set a target to venture, try to meet that on an annual or a long term basis, whatever that is, build towards that. Don't necessarily listen to the market, the prevailing sort of macro trends or things that are happening today. Because when you think about it, a venture investment made today is likely going to exit in a very different time in 5, 7, 10 years. So try not to let the current market environment impact your investment decision making. That's an optimist's world or a idealist's world, I should say. In reality, this thing called the denominator effect comes in for a lot of the institutions where private equity or venture capital is a percentage of the portfolio, the denominator being the total portfolio. So if the value of your public equities goes down, given that these are marked on a daily basis, there's a lot of volatility in that portfolio. That may present an optically overexposed or underexposed to the asset class, even though you can't immediately generate either liquidity or more exposure at a point in time. So you do have some of these things that might cause unnatural behaviors during certain market cycles. We saw it during the great financial crisis in 2008. A lot of folks, 2008, 2009, I should say, a lot of fire sales, right? Folks were overexposed to the asset class. Their public equities really took a huge hit. They were even more over allocated to venture, and you saw secondary sales of really high quality assets. But more than anything, the LP needed to reduce their unfunded commitment burden. They didn't necessarily have the cash to raise to fund those commitments or didn't want to. So I think you have to position yourself in a way where you're aligned with a long term target and you have the long term view. And to the extent there are short term deviations off of that, that's okay, but with keeping that long term target in mind.
Absolutely. Yeah, that's a very good point you made there that if you have a mandate to invest into VC, then that should not fluctuate a lot depending on the current market cycles. VC being a long-term asset class, you if you look at the current performance of your previous venture portfolio and decide based on that how are you going to allocate to it, that might not be the right way to do it. Why? Because the allocation that you'll do today will actually take fruit in the next 10 years, and that might be a very
Absolutely.
different environment.